Most people think of VAT, corporate tax, and e-invoicing as three separate compliance, which is different from reality. The FTA has quietly connected all of them together. And once e-invoicing will be live from 1st Jan 2027, there is no gap to hide in. Hello everyone. If you are a business owner, finance manager, or an accountant in the UAE, this is for you. Once e-invoicing is live, every invoice you issue will be going through three different compliance simultaneously: your VAT return, your corporate tax return, and via invoicing as well. Let me break through each layer one by one. VAT. This has been introduced in 2018 in the UAE. Every registered business submits its VAT return and declares their output liability and input claim. Through VAT return, FTA already knows your revenue, purchase, import figures, export figures, and zero-rated supplies for each tax period. Layer 2. Corporate tax. This has been introduced in June 2023. Now here it gets interesting. During the filing of corporate tax return, we disclose our sales figure, expenses, related party transactions, allowed expense, disallowed expenses, everything. So the FTA can ask you now, does your corporate tax return and your VAT return lies on the same page? Does your corporate tax return and the VAT return matches with the same figures? Are both telling the same story? Let's take an example. During the period, if your VAT return discloses revenue of, let's suppose, 10 million, and your corporate tax return reflects the revenue of 86 million only, then FTA wants to know where that difference of 4 million went. Appropriate reconciliation will be required to be prepared to justify to the FTA. Layer 3. E-invoicing. This is very important to note. Under e-invoicing compliance, invoice does not go to your customer directly. It goes to the FTA first via your ASP. Further, ASP shares the same invoice to the buyer ASP, who ultimately, after checking, again shares the same invoice to the FTA and finally to the customer as well. FTA will be able to see both sides of every transaction instantly. That is, the same transaction will be reported, one from the seller side and again from the buyer side as well. No more fixing of errors. Any error can be rectified only through credit notes, and which will be shared again to the FTA via same process. So let's understand how do they connect. When you share an invoice, that transaction will go to the FTA via e-invoicing compliance. Additionally, it will be populated in your VAT position as well, and the same revenue will be considered in your corporate tax return as well. One transaction, three outputs, all recorded to the FTA, all visible to the FTA. If your e-invoice data and your VAT return data and your corporate tax return data does not tell the same story, a red flag is raised automatically, which invites FTA scrutiny and FTA queries for your companies. This is why compliance is not just about filing anymore. It's about data integrity across all three systems. So what should you do now? First, reconcile your VAT and corporate tax monthly or quarterly basis. Second, start preparing for e-invoicing now. Appoint your ASP. Check if your accounting software whether it is ready for e-invoicing or not. Third, if you don't have one advisor managing all the three areas together, you need to fix that today. There is no blind spot left in the FTA system anymore. If you found this video useful, follow for more such business, finance, and compliance related content. You can send me your queries directly. I will answer each of them. See you in the next one. Stay ahead, stay compliant. Thank you.